So Jerome Powell has just taken a big U-turn this morning at Jackson Hole when he specifically said that the time has come to adjust the policy, which literally means he's saying that, guys, I'm going to start cutting the rates from September. This is what literally he meant to say. And the market interpreted, very, very clearly. And we saw the market went up. The bond yields, further went down. Bitcoin went up. The gold has gone up. So I think pretty much, market reacted as per the expectation, because when you come out as dovish as he was, the market would actually rip higher. And this is exactly what happened. But the question is, why? There could be two possibilities, right? Number one is he is genuinely concerned about the weakness in the labor market, because what we saw last week, that the BLS, Bureau of Labor Statistics, they have been fudging numbers. Okay, when they publish the job numbers, they revise it down 2 weeks after. Every single time when they publish those numbers, pretty much every time they revise it down. So we found out that around 818,000 jobs were actually bogus. They were revised down after publishing the data. So I think now he's saying that the numbers are fudged. There is a lot of immigration from the south of the border also into the US. So maybe the labor market is not that tight anymore, right? Now he's seeing the weakness in the labor market, and he's seeing the unemployment is actually climbing up very rapidly. So he might be genuinely concerned about that. Okay, that could be one reason. Number two reason could be, somebody in the Biden administration might have given a call and say, hey buddy, keep the lid on, because we don't want any mass going into the election. Okay, so keep the lid on. Okay, so maybe that's the reason. But regardless, when we analyze that where we are at right now, and at that time he's going to stop his tightening cycle, that could be questionable, because none of his fight against inflation has been won yet. Okay, the inflation is still above his target range, and he was saying that the inflation is not the focus anymore. Like 2 meetings before, he was saying inflation is still a problem. The one meeting after, he was saying inflation and unemployment is kind of in a balanced state. Now he's saying inflation is not a problem anymore. Okay, what made him to pivot that quickly? So inflation is not a problem anymore in his mind. Now he's focusing on growth and rising unemployment, because when you look at the central bank's mandate, they have 2 mandates. Number one, price stability, and maximum employment. He is literally screwed up on the price stability front. Okay, even though if you look at inflation, which is not really the measure of the price increases, it is still above his own target range, and the prices have been higher at least 20% from the pre-pandemic level. So he's literally a failure on the price stability front. Now he might be thinking, okay, I've already screwed up on this side. I don't want to be screwed up on the unemployment side. Okay, maybe that's really what he is concerned about. But what could possibly go wrong from here? So I'm going to present 4 points. You make your own decision and analyze how things will go from here. Okay, so number one, if you look at the markets, okay, the market is all-time high. S&P index is all-time high. At this point, when the market is all-time high, Federal Reserve Chair starting his easing cycle. So what could possibly go wrong? It can further inflate this market bubble, and when eventually this will come to realization that the market is in the bubble, it can come down even much harder. Number two is, if you look at the Case-Shiller home price index in the US, the house prices are all-time high. Okay, if you look at the rent, the actual asking rent in the Zillow rent index, it's all-time high. Okay, so now you have all-time high equity markets. You have house prices and the rent prices all-time high. What could possibly go wrong when you start easing your monetary cycle right now? Okay, so let's assume someone can live without a house, but they cannot live without food. So if you look at the food prices, both at home and away from home, they have been all-time high as well. Okay, so what could possibly go wrong when everything is all-time high and you start cutting rates now. We have talked about the money supply growth, recently. In the past, we saw the money supply growth has been shrinking, for the past 2 years. And now we're seeing it is climbing back up. So the money supply M2 aggregates is climbing back up. So what could possibly go wrong when the money supply is climbing up and you start cutting rates? So just a bit of a history. Arthur Burns is one of those central bankers in the US when he prematurely finished his tightening cycle, and then after that inflation ripped higher right after that. Okay, I'm not sure if it's going to repeat like this. Just presenting you the data so you can make your decision about your investment portfolio and protect yourself from any downward leg. Anyway, you let me know what you think about that. How are you protecting your finances in your portfolio? Check the links in the description. There's some free stuff available for you, and let me know what you think about that. Put your comments down below, hit the subscribe button, and I'll see you in my next video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.